Hello everyone, and welcome back to the Tepper channel. It's been a while since I last posted. I want to be upfront, my spoken English isn't perfect, which is why I produce these videos in this format. But I truly hope you find the analysis interesting and useful. So, let's get right into it. Let's talk about Amazon today, specifically in the context of data centers and cloud computing. The simple fact is, Amazon's main division is AWS. This is where they get most of their money, most of their profit. The profitability is massive. But a huge problem is brewing in this market. Here's the problem. As you know, in 2024 and 2025, companies are pouring a lot of money into building data centers. It's a massive investment boom. For example, in 2025 alone, the capex for the tech giants will be $240 billion. Now, data centers aren't built quickly, it takes a year or two. And we're now at the point where the investments made in 2024 are right now starting to come online. This means the cloud computing market is about to see a massive increase in total supply. Now, let's rewind. Back in 2023, thanks to AI, there was an explosive growth in demand for cloud computing. Back then, there wasn't enough capacity. Demand clearly outpaced supply, and it became a seller's market. There just wasn't enough capacity to go around. Everything started growing like crazy. Investors were thrilled, they saw this market growing, demand was unmet, everything was great. But, do you see what's happening? With this new capacity coming online, these huge investments, they could actually break the market. The amount of new capacity could start to exceed demand. And the market will flip. If we see a data center shortage right now, in 6 months or a year, we could see the exact opposite picture, where demand is less than supply. Just think about it. If we measure global data center capacity by electricity consumption, it was around 60 billion kilowatt hours per year. By 2026, that number is projected to be closer to 100 billion. That's a 1.5x increase in energy use. But new data centers are built on new tech, new chips. They have much higher performance than the old ones and use less power. Every new gigawatt is several times more productive than an old one. So, that 1.5x increase in energy could actually mean a real capacity increase of several times. You see? And you know, when we say, demand is growing, well, let's say it grows at 15, 20, 30% a year. But the pace of new capacity construction will clearly outpace that. And we'll get a completely different picture, where there's a lot of supply, but not enough demand. Let's also evaluate the demand. As I said, 2023 was an explosive year. It led to companies saying, we are at 100% capacity, we simply have no free space. Essentially, every new data center that was brought online was immediately filled, almost instantly. And here's an interesting side note you might not know. The reason Microsoft and Google were growing faster than Amazon is simple. I can draw you a model. Imagine in 22, Amazon has 10 feet units of data centers. Microsoft has 5, and Google has 5. The big build-out begins. Everyone spends roughly the same and starts building 10 new units each. What's the result? Amazon will have 20 units, that's a 2x growth. But Google and Microsoft will each have 15 units, that's a 3x growth. That's how they grew their market share. For the last 2 years, as soon as a new data center was built, it was immediately full. There was no real competition. The market just ate up everything. This demand was based on a few components. First, applications. You've probably noticed so many new apps in the last 2 years. AI caused a boom in creating new apps and updating old ones. And these thousands of companies don't build their own data centers, it's easier to go and rent capacity from the giants. The second segment is corporate. Large companies, why build your own data center? You rent. The arrival of AI was a hype. This is interesting, let's try it. Everyone started trying it, and there was huge growth from a low base. And third, AI itself just eats a lot of memory. qualitatively more. So, those are the three factors for the strong growth in 23, 24, and 25. So, what's next? Next, I don't think applications can keep growing this fast. The initial explosion is over, and it's limited by consumer demand. You see the point? All these apps, in the end, are based on simple consumer demand. The problem is, consumer demand isn't growing that fast. If an American spent, say, $200 on all subscriptions in 22, they aren't spending $300 now. On top of that, the US economy isn't in the best shape. It's growing because of AI, but other sectors are weak. There's no foundation for explosive consumer spending. Now, for corporations. They tried it, there was a boom, but now there's likely a slowdown coming. For corporations to really implement AI, they need cheap credit. And right now, credit is expensive. Fed rates are high. Look at other sectors, investment in fixed assets is pretty weak. So, we can't expect a breakthrough in demand from there either. The only factor left is that AI itself just consumes more and more resources. What I'm saying is this: the pace of data center growth coming in the next year or two will definitely satisfy the old demand. It's possible that the explosive demand from 23 and 24 isn't fully met yet. And these new centers, as they're built, are just filling up that old demand. But the new demand, the demand appearing today, is very weak. Sooner or later, the data centers will satisfy all the old demand. They will continue to be built at a high rate, but there won't be enough new demand in those volumes. As a result, we'll get to a point where data center utilization, as a percentage, will fall, supply will grow, and demand will lag. And at that point, the market will completely change. All this wild revenue growth from cloud computing will stop. And that is the biggest problem. Primarily for Amazon. If you look at Google and Microsoft, they have other sources of income. Google has search, Microsoft has Windows and subscriptions. For them, the cloud is just one of their markets. But for Amazon, this is their main market. It is the backbone of the company, for the most part. Therefore, problems in the cloud market will hit Amazon first. And that's why I'm putting a hold recommendation on it. If I suggested buying Amazon in the summer, I am now suggesting a bit of caution. Why not sell? First, what I'm saying is a forecast about the future. It hasn't happened yet. We haven't seen the market fall. The switch from a seller's market to a buyer's market hasn't happened. And second, Amazon has a perfectly reasonable P/E ratio of around 32. It's not that different from the US market average. Nevertheless, I would warn you. These are the risks I see, based on my logic. Obviously, many might disagree. And of course, there's a risk I'm wrong. My position is built on demand slowing and supply overtaking it. But what if AI just grows so fast it eats all this new capacity, even if the price per terabyte doesn't fall? It's possible. But in that formula, the final variable is still consumer demand. And it's possible the economy will recover faster than I expect and generate strong demand. But for now, this is how I assess the risk. I hope you found this information interesting and useful. Please subscribe to the channel and hit that like button. Thank you so much for watching. I'll see you in the next one.